Hi, good afternoon from Kingston, Jamaica for the Proven Live Investors Forum. This afternoon, we will be giving you an overview of our performance for the financial year ending March 31, 2024, as well as giving you some general updates on the evolution of your business. We thank you for joining us this afternoon. And more importantly, we thank you for continuing to believe in the proven dream. Before we get started on the Investor Forum, I'd like to spend a minute or two to address my recently announced retirement plans. The evolution of Proven has been a significant achievement for us, the co-founders. Back in 2010, February 1, 2010, when we opened the doors, we would never have envisioned that 15 years later, we would have evolved to such a large Caribbean-wide organization. And we're extremely proud of what we have achieved, and more importantly, what the team we have assembled and put in place. One of the critical aspects of the evolution is succession planning. And we firmly believe that, after 15 years at the helm as the group CEO, now is the time for us to identify someone that can take us the next 15 years. And that the timeline for that, we think, is good after 15 years. So we are very ready and we are very prepared for this transition. This is a transition of the executive leadership. It's not a transition out of the strategic leadership of the group. I will remain a part of Proven. I will remain Proven. I will remain on the investment management committee, which drives a number of the strategic initiatives of the group. And I will remain a director on all of the subsidiary boards. So we are still, as a team, focused on presenting you with a solid strategic plan, and more importantly, performing on that strategic plan. So this transition is a good step. It's ensuring that Proven continues to dominate and continues to grow. So we're ready. No need to worry. It's gonna be okay. So I will now hand over to our Deputy Group CEO, Johan Heaven, and he will walk you through the results of the financial year ending March 31st, 2024.
Thank you, Chris. Welcome to everybody on the live. It's my pleasure today to carry us through the financial performance for the year ended March 31st, 2024. What has been a relatively good year for Proven, especially within the context of a difficult macroeconomic environment. Things are tight, interest rates are still elevated, economic growth isn't where it was over the pre-COVID years, but Proven has performed very well during the year, and we're very happy with the overall results that we were able to produce during the year. So let me just carry you through on our performance. Firstly, can change the slide there, please. So net revenue, which is our main, the line that we look at on a day-to-day basis, growth in revenue is critical to Proven. We're up 11% year over year, 55 million in net revenue for the year. Net profit, 12.32 million for the year, translating to an earnings per share of 2 cents per share. We had significant growth, or good growth in our balance sheet over the year coming in from all our subsidiaries and divisions. So our total assets are up to 1.1 billion as at the end of March. And our total assets under management, which includes our balance sheet assets, plus what we manage on behalf of clients through our funds, the various funds that we manage, and the various pension funds that we manage, that now is up to 1.83 billion as at March. So we're very happy with the growth that we've seen year over year. Looking at our various revenue lines, we've seen where most of our revenue lines have grown year over year. First of all, and one of the most important and consistent lines in our financial statements is our net interest income, up 1.7% year over year. And this growth was mainly driven from our banking division. The banks make up about 90% of our net interest income, and their growth would have stemmed from growth in their balance sheet as well as repricing on the loans in the portfolio. Looking at the second largest income line of our net revenue, our gross net margins from our manufacturing operations in Barbados from Roberts Manufacturing, up 63% year over year, coming at 16 million compared to 9.9 million last year. The previous year, margins were tighter than they were this year, and we were able to reduce costs and increase our gross margins coming in from our manufacturing operations. We're very happy with the performance of Roberts Manufacturing. They had an extremely good year. One of the key items that we're zoned in on is our fees and commission. This line was down year over year, and mainly coming in from just a general market environment right now. Trading activity and commission-based income has fallen off a little bit in our wealth business. So we're down about 20% on our fee income year over year. The third and the most significant line that contributed to our net revenue for the year was our share of profit of associates. And this is a share of profit coming in from our holdings of JMMB as well as Access Financial Services. So for the year up to March, 15 million was the share of profits coming in from these. And this included, on the JMMB side, a large one-off gain on the acquisition coming in from their holdings of Sagicor, and again on an acquisition that happened during the year. So, it was a one-off, but it did contribute significantly to our income year over year. The prior year's results were actually restated. So prior year was previously about 8 million. It was restated down to 1.1 million due to a change in accounting standards and accounting treatment of the insurance policies at Sagicor, which fed up into JMMB and fed up into our results. So all in all, when you look at all of our net revenue lines, good performance, 11% growth for the year. The other line I would like to also highlight is our fund management income line, which is very stable. We're seeing good growth in our assets under management, up 10% year over year. And then finally, on our other income, which includes our rental income on our properties, plus other income lines, up 30% year over year. So all of these lines contributing towards our performance for the year. So as I said, net revenue, 55 million for the year compared to 49 million last year. And on the expense side, we actually saw a reduction in expenses year over year. So 10.16% reduction in expenses. Last year, as you would probably remember, included some one-off expenses from the impairment of our intangibles and our holdings in associated companies. So that would have ballooned last year's expense line. This year's expense line came in at about 56 million. And this year as well also included some one-off expenses from redundancy exercises that we had during the year and some other expenses during the year. So we're zoned in, as Chris would always say, on our operating expenses and our efficiency and getting as efficient as possible. So the bottom line is net profit, 12.3 million for the year compared to a restated net profit of the previous year of 12.1 million loss last year after the restatement of our share of profit of JMMB, as I said, coming in from the changing in the accounting standards on the treatment of the insurance business. One last point to highlight is our dividend yield. So during the year, financial year last year, we would have paid out 0.5 cent in dividends across the year, and that translates to a dividend yield of 3.3%. And this is one area that we are very keen on in terms of returning cash back to our shareholders. Income generation is one of the key drivers of Proven from day one right up to today. We're very keen on returning cash to our shareholders. And of course, this cash will come from the numerous businesses that we are invested in and the generation of cash from those investments. Return on equity, this shows our 10-year trend in return on equity. Our target is between 12 to 15% return on equity. Over the 10 years, we're at about 10%, so a little bit below our target. It would have been dragged down last year by the restatement, which had a negative 12% last year. Without that restatement, we would have been within the 12 to 15% target range for our return on equity. So again, return on equity leads to the ability to pay dividends. So, so operating and ensuring that we are getting the operating results from our subsidiaries and from our associated company is our key focus going into this financial year. So just wanted to give you a quick update on our 4 pillars and our strategic focus for this year and going into next year. So we have, over the last 2 years, been operating under these 4 pillars: our wealth division, banking division, our properties, and our private capital, which includes our associated companies. We are very happy with this overall structure and how we have divided up the divisions. It has simplified our operations and has allowed us to by branding all of these divisions under the Proven brand, has allowed us to be able to leverage and have synergies across the various divisions and units. On the wealth side, our focus right now is on improving operational efficiency, and mainly through the implementation of technology. So we have implemented our core banking system, and we're in the process of implementing other systems to complement that will drive efficiencies across our wealth management business. As you can all appreciate, financial services in this day and age is driven by technology. So technology is key to driving the business. Our chairman, Peter Bunting, always says that we should really be running a tech company, with a financial services license. So technology is a critical component of our business and our operations. Our growth, we're looking at implementing new offshore mutual funds to be able to distribute throughout our territories. So we're operating currently in 6 different territories throughout the Caribbean, through the region: Bahamas, Bermuda, BVI, Cayman, Jamaica, and Barbados. And we've divided it into 2 regions, Region 1 and Region 2. So we have a new set of mutual funds that we registered out of St. Lucia that we will be looking to distribute throughout Region 1 particularly. Region 2 already has its own suite of unit trust products, which are registered in Jamaica. And the drive right now is on growth in Region 1, which is Jamaica and Bahamas, through all our commission-based and trading activity. Since the beginning of the year, they've had a very good quarter. And specifically, we've seen an uptick in equity trading, cambio activity, and investment banking activity. So quite happy with the overall performance of wealth. and the focus for wealth is growing the commission-based income going into this financial year. On the banking side, very stable, very profitable, return on equity on both banks, north of 20%. So we couldn't be more happy with the performance of the banks over the last financial year. Net interest income has benefited from the high interest rate environment that we're in right now. And we continue to see the repricing, especially on our investment portfolio, as the lower priced investments mature and we repurchase new investments at these higher rates. We're seeing a constant gradual increase in our net interest income. Fee income is an area that we're really focusing on and growing the balance sheet of the banks. So deposits, growing deposits, and growing the loan portfolio. The focus for the banks right now is growth. And we have various initiatives in the pipeline to be rolled out this year from a sales and marketing perspective. We will believe will have a significant impact on growing both portfolios, both in Cayman and in St. Lucia, two total different businesses. In Cayman, it's a retail bank, onshore, your traditional banking products, loans, credit cards, savings accounts. In St. Lucia, offshore bank catered to non-St. Lucians, catered to the region, and different type of clientele. So it's two very different businesses that we're operating, but they're both doing very well. And we are in the process of implementing our Olympic banking system in both banks, which we expect that project to be completed between September and October of this year. And that will allow all the financial services companies within the group to be operating on one banking platform, which will endeavor to improving efficiencies, improving the level of service that we're offering to our clients across the region. So again, banking is an area that is doing very well for you as shareholders and for Proven. The properties division, you drive across Kingston, you drive Mandeville, Ocho Rios, iconic properties being developed by our properties division. Couldn't be more proud. Even the office that we are now sitting in, we're all in this brand new office, Proven Place on Gladstone Avenue, and we're really proud of what we've been able to achieve and what the properties team has been able to achieve in terms of the developments that have been completed. The focus right now for the properties team is two major developments. Firstly, Sol Harbor in Ocho Rios, the completion of that, which is slated for May of next year, December of next year, and Bahari Phase 1 in Runaway Bay. Bahari is 206 unit development made up of townhouses, condominiums, and villas. And that is expected, the first phase is expected to be completed in May 2025. Sol Harbor is two 7-story apartment complexes in Ocho Rios, and those are expected to be completed in December 2025. Sol Harbor is 100% sold out. And the expectation is that once those properties are closed, are finished, and the properties handed over, then we'll be able to book the gains on those properties, in line with the completion date of those properties. So for the properties division, we don't expect any developments to be completed within this financial year. So the main focus within this financial year is on the rental income coming in from those properties and the completion of these other developments across the island. On our private capital portfolio, which includes our holdings in Access, 25%, 24.7%, JMMB, 20%, and Roberts, 50%. Very good financial year ended March 2024, Access saw 34% increase in their pre-tax profits, 13% year over year in their post-tax profits. Loan disbursements are strong, and the focus right now is on operating efficiencies and just growing the profits going into this financial year. JMMB, as I said, had a very strong financial year, mainly because of that one-off, and the focus there is really on enhancing value creation going into the future. So, we are looking forward to an improvement in the core profits and the performance of JMMB going into this financial year. And finally, Roberts had a really good turnaround year, 48% growth in gross profit. That trend continues into this financial year. And, net profits year over year had a 3 times increase when compared to the previous year. And right now, export growth is where we're going. So selling outside of Barbados is the focus right now for Roberts, and growing and diversifying the revenue streams and the base of Roberts going into this year. So all in all, a really good year. What is key for us on top of these initiatives at the various pillar levels is Proven's focus is on growing with our talent and our technology. So the 2 pillars, talent and technology. Our people, we believe we have the right people in place. We have an extraordinary team, and we're very happy with the team that we have now, from our CEOs and leads and everybody within the various teams and the various pillars across the group. And we're leveraging that with the technology that we're implementing. And the focus is on growing core profits, growing operating profits, and looking to our associated companies for them also to contribute towards the growth and profitability of Proven going into this financial year and into next financial year. So that is it, ladies and gentlemen. Thank you very much. At this point, we'll take any questions that you may have. And I believe you can type the questions in the chat if you have any questions for myself or for Chris. Yes, and additionally, our other CEOs of our various subsidiary companies are also online, should you have any questions for them.
All right, so the first question, what would be the catalyst for the demand for the shares? Because I see the shares are falling like a ton of bricks, no word from management in that regard.
Well, I think if you look at the share price, you have to look at it through 2 lenses. One is the demand and supply dynamic of a stock market, and those demand and supply dynamics we don't have control over. Those demand and supply dynamics are driven by other factors, such as risk-free interest rate, such as other inflation, such as other asset class opportunities. So the demand and supply dynamics have put pressure on all stocks locally and to some extent globally. And there's no secret to why, and that is because interest rates on fixed income instruments are now in the low double digits, and that's going to be hard for any equity to compete in. So that's one. But that aside, when you take a look at the footprint of assets that's in the Proven Group portfolio, you're going to be hard pressed to find any other group across the region that has such a diversified footprint. We are in, all the English-speaking, significant GDP English-speaking islands, St. Lucia, Barbados, Jamaica, Bahamas, BVI, Bermuda, Cayman. So we picked those markets in particular because, as I said, one, the strong GDPs, and two, substantial populations, within the context of the Caribbean, of course, and then three, and probably most importantly, the ability to get cash out in terms of a liberalized currency. So that footprint is attractive. When you take a look at our cost dynamics, we have cut operating costs. We're flat on top of an 8 to 10% salary increase. So, so that demonstrates that, we've been able to bring costs down to be able to absorb, that level of increase. So we are demonstrating the efficiency that you want to see in a business model. Where we're hurting is in our private capital space, and we're confident that the investments that we've made in the private capital space are going to turn around and are going to show us the kind of performance that you expect, and certainly that we expect. So, why stick with us? We've done all the hard work. For the first 15 years, we've built out a footprint that is unmatched. We're in all the right markets. Our cost infrastructure is extremely light, and the brand is well known and is strong. The final pillar Johan spoke to is the technology that's coming on board within this financial year, and we're going to be fully wrapped. We have talent, we have brand, we have technology, we have market diversification. So we have the infrastructure that you want to see in a business that you own. We know where the problem is, and I'm telling you, we're gonna get that problem fixed.
And Chris, there's a question around no word from management with dividends. Can you speak to that?
Well, I think Johan spoke to that. I mean, what Johan basically said was dividends flow from profits, from return, and we have received a fairly substantial hit on our associated companies in terms of, one, its output, its profit, but then two, even more importantly, the cash coming from that investment. So we're not getting that cash, and if we don't get that cash, we can't pass that cash on to you. And so, we have to fix the return, the cash return, and then we'll be able to fix the dividend. And so we are zoned in on it. And this is not a fixed income, opportunity for you. This is an equity. And so we're going to have periods where our dividend flow fluctuates. And that's what we're going through right now. But if you take a look at Proven over the last 14, 15 years, we've been, fairly well. We've done fairly well on dividend flow, and we expect that we're going to get back to that, within the next 2 quarters. So yes, we've dropped off on dividend for this quarter, but we're gonna be back, very shortly.
And there's a question here from Joe Bates. Wealth management divisions have 1.7 billion in assets under management. How much of that generates fee income that is ongoing, like an annuity, versus how much is only generating trading commissions?
All of that is invest funds under management and generates fee income. We didn't include our funds under administration, which is another 3 billion, which is the business that we hold in custody on behalf of our clients. So all of that 1.8 1.86 million funds under management.
Assets under management.
Assets under management drives fee income.
Yeah. So custodial assets which we trade, we haven't been reporting that. Well, I guess we could report that as well. Yeah. So we would have three classes. We'd have assets, which is on balance sheet at 1.1. We would have assets under management at 1.86, and then we would have assets under custody, under administration, at 3.
All right. Will share buyback be a consideration for stock price improvement?
No, not at this time. We've discussed it. I mean, we don't think anybody has executed a successful share buyback program. You know, we've looked at, you know, everybody else that has tried to do it. First of all, it's just small, and then secondly, of course, it's expensive because the company is going to have to pull cash from elsewhere, and that cash is going to come at a cost. So no, we don't think that that's the strategy. We think that, you know, the businesses go through periods of fluctuations because of macroeconomic variables, and that change the demand supply dynamic, and that's just the nature of the equity market. And so we're going to have to appreciate that as shareholders, and you know, and just, you know, allow the market to correct itself, which it always does. It always does. So we know it's going to correct itself, and we're going to get a better demand supply dynamic flowing from inflation and interest rates and so on. And then our job is to stay focused on what our job is, which is to build a solid business, not to, you know, do all kind of, you know, earnings management and stock price management, you know, things. No, that's not our job. Our job is to make you proud by building an everlasting business, and that's what we're doing. We're delivering a strong brand, we're delivering excellent talent, we're delivering excellent technology, and we're delivering excellent return on investment for the assets that we hold. The ones that are not delivering the excellent return on investment, we have to zone in on, we have to correct, and that's what we're doing.
This question is from Vanessa Claire. When will you have someone on the ground heading the BVI office?
Chris, if you don't mind, I can take that one for you.
Yes.
All right. So we are currently reassessing the strategy for BVI operations. But however, in the immediate, we are servicing our BVI clients through the Cayman office. And this allows us to really maintain a certain high level of standard and excellence that you have grown to know with us. So while we're doing that, we are going to be continuing to reassess our on-the-ground presence in BVI, but we'll continue to keep our clients updated on that progress, on the future development of that. All right.
And this last one here is our follow-up to our question Orville Reeves asked prior. His is basically a comment. So the market's not seeing value in improving growth because investors only make money two ways: capital gains and dividends. So I don't know if you guys want to respond to that.
Yeah, and both, and we agree. And you deliver capital gains and dividends, as Johan said earlier, from performance. That's what, you know. So capital gains comes from the valuation of the business, and the valuation comes from the multiple of EPS, and EPS comes from performance. Dividends also comes from EPS, and EPS comes from performance. So everything points right back to performance. So we have to stay laser focused on performance. We have to stay laser, and performance is revenue minus expenses. So Johan walked you through the revenues and showed you, the revenue area that we have the greatest concern is in our private capital space, in our, one or two of our associated companies. Wealth, is getting there, and we're quite happy with the progress we made over the last year. Bank is there, properties is there. So we have to keep zoned in on wealth, keep zoned in on the associated companies, and with 24 hours a day, 7 days a week, we're zoned in on those two spots, because those two spots are our weakest spots. On the expense side, we made the corrections last year. We had significant organizational restructuring. We've cut the operating costs, so we're happy with that. That's done. So all we have to do is get back to the revenue side and make sure the revenues hit. And that's what Johan said earlier, and that's what we're doing. So we can't deliver for you the appreciation and the dividends without fixing EPS. And so that's what we're fixing. We're fixing EPS. It's going to take a little time. It's going to take time. But we're saying to you, you don't buy or sell businesses, on the daily trading price of our stock. We're partners. We're shareholders. We understand that businesses take some time to turn, and we are turning it. So, I'm asking you to allow us to show you that we can turn it, as we have done previously over the 15 years of our relationship. Yeah, so thank you all for tuning in and for drilling us with those questions. We ask you to continue to believe in us. We can't control the demand supply dynamics. We can't dictate, where the Fed rates are, where, the Central Bank of the Caribbean islands, where their rates are, and therefore what the competition is for your capital. What we can control is what we are controlling. We can control that we have, and we will continue to build an amazing business. The brand is strong. The diversification is excellent. The talent is top tier. And as Johan said, we're adding to that now the final pillar, which is the technology. So we are giving you a business that you want to own. You may be nervous right now because of all the outside factors, but we have been through a hurricane. We are building back the house, and it's going to be an amazing house. It's going to be a house that you're going to want to live in, and you're going to be able to sell, for a good gain in a few years. So stay with us, please. Stay with us. We're not going to disappoint. Thank you, and we speak again.
So the next event on our calendar is our AGM, which is mid-September. So look forward to presenting the first quarter at that AGM, and see you all there.
Yeah, that's going to be mid-September. Yeah. So we're keeping in front of you as frequently as possible. So we'll see you again in another 6 weeks. Take care.